Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. Okay, we got jobs in about 14 minutes, so I'll keep this fairly short. For the fourth session in a row, at least heading into the jobs report, we've got resistance at the 9-day, the blue line. It's been support for a long time. It's been resistance these last few days. I went into a pretty detailed discussion yesterday of what I use the 9-day for. If you didn't have a chance to check out yesterday's webcast, I would encourage you to do so. So look, we're sitting right on the 9-day. You can see the Bollinger Bands that are starting to tighten up a little bit. So you know we're not really in compression. We could develop some compression next week and then deal with an expansion phase. But looking at the hourly chart. The tail has been, right now the 9 days at 26. It was at 24. It was at 22. So, I can only draw a straight line on this sucker. But, it's been resistance here, trying to be resistance here. Your daily mid-bands at 14, monthly pivots at 10 and change. So we're still jammed up in this area. The bulls have got to convert the 9-day and head higher. They've walked it up into jobs. Yesterday was a solid day for us. We caught basically the whole day. We ended up in another long into the close that we held overnight for the walk up into the jobs report. We just took profits on that and closed the whole day out for just a little over 30 handles. So we're sitting at 88 on the week, and 80 is our monthly goal. So Happy New Year to us. We're gonna keep trading just because. It's been a very solid week. It's been a very tradable week, coming off the back of what was kind of a tradable week. Really, the only lousy day for us was Wednesday, and that was just because I wasn't seeing it very well. So jobs, 26 on the upside. You got 10 to 14 on the downside. This chunk of price has got to convert. If the bulls can convert 26, it does open weekly pivot. If the bears can somehow convert everything down to and including 10, they can really make a push back to those lows. But you get the feeling, especially with the China news that they tried to come out with yesterday afternoon, that kind of spiked the market down, for a moment down to that 08 area, and then they popped it, that there really just isn't a whole hell of a lot that's going to knock this market down. It's going to take sustainable, negative, tariff-related news that is real and sustaining. And if you don't get that, rightly or wrongly, whether you like it or not, the market's going to continue to bleed higher. We've had this discussion before. We traded at 31.58, we traded down to 69.5, and we're retracing it. What do the bears need to do? They need to have this be a bear flag up to the 9-day, and they need to break it. They have to execute. If they don't, then we go back to 31.58 over the course of the month. It is what it is. But you have to look at this thing for what it is, not what you want it to be. And, an area like the 9-day, at a minimum, what it can do is it can help guide you. Now, does that mean we always use the 9-day? No. In the past, it's been the 20-day. Years ago, the 100-day. Gold loves the 100-day. It's whatever the tape cares about at any particular moment. And over the last 3 months, the tape has cared very, very much about the 9-day. And it's going to make some decisions today about where we go into Sunday night. All right. Take care. More stuff out on social. Jobs in 10 minutes. Trade them well. Have a great weekend. Talk to you Monday. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.